Rattled European markets have started selling off again tonight as worries about Greece continue to plague investors. News that the European Central Bank has stopped lending to some of the shakier Greek banks has added to the alarm. Here's Philip Lasker.
Melbourne played host to the Olympiakos football team, Greek citizens with jobs lucky enough to escape the chaos.
They think that Greece go on, Europe as well.
But given Greece's problems, investors aren't so sure.
The problem is the example it may set for other, much more important European economies and the risk that they light the fuse that goes all the way into the centre and the place blows up.
The European Central Bank has stopped giving money to some unidentified Greek banks and people are pulling money out.
What the ECB has now done, it's set the precedent. It's drawn the line with Greek banks. Perhaps in a month or two it'll draw the line in Spanish banks, and that's a much bigger deal.
European markets have started falling again tonight amid fears Greece will exit the euro.
Even after a Greek departure from the Eurozone, the world will continue to turn. It's no disaster, but it will lead to a lot of pressure on capital markets. It will lead to uncertainties and it will cost a lot of money.
It is much cheaper to keep Greece within the Eurozone and virtually reduce the collateral damage, ongoing collateral damage, as opposed to letting Greece leave the Eurozone and then face the consequences of that.
Authorities are in a no-win situation.
It is not sensible to think of this solely in terms of euro stays together, excellent, euro comes apart, disaster. Whatever happens, there are major problems ahead.
Another significant knock to Europe affects China because Europe's a major customer and that would hit Australia's commodity exports, quite apart from the direct impact to financial markets and confidence here. Although none of this surprises the Treasurer.
We've already accounted for those outcomes in our forecasts and therefore recent events in Europe do not have a dramatic impact on our forecasts or our outlook.
But it may have an impact on borrowers.
What's happening in Europe may increase the wholesale fund, and that means our commercial banks could increase, in effect, home loan and other loans over time if the current crisis continues in Europe.
It suggests the Reserve Bank will have to ease that pressure by cutting the official cash rate again.